I might start with you. Firstly, good to see us finishing positive territory, but it seems it could have been a lot better.
It could have been a lot better. Our market was on positive ground, but it's hard to read too much into the move today, and that's because of the extremely light volumes we saw going through the market. In fact, if you have a look at the last 3 months, the average traded per day is $5.4 billion for the ASX 200, and today we saw less than the average. In fact, in the last 4 trading sessions, we've seen less than the average. So altogether, it does look like investors still a little bit nervous and on the sidelines. Not surprising seeing the problems that we are seeing in Europe, especially surrounding Greece at the moment. And of course, the weaker data coming out of the US. Overnight, we saw housing starts plummeting by more than 10% in April, and industrial production coming in flat. So altogether, no real big moves in terms of sectors on the Australian share market, although one area that did move was telecom. Telstra managed to break that $3 barrier, so telecom was the best performing area. In the material space, we did see the iron ore miners doing well. Fortescue was up by 2.9%. Atlas managed a gain of 3.4%, and the agricultural stock, some speculation in terms of merger and acquisition activity. So GrainCorp up by a massive 5.4%, and we also saw Incitec pivot up by 3.5%. But altogether, no clear trends on the Aussie share market, up just slightly.
So broader drivers to our market, as you say, well, as Michael made mention of, Asian markets did well today, outperforming us. But we seem to have ignored again, I suppose, that lead from Wall Street. So what are the main directional forces in terms of offshore markets impacting our market at the moment?
I think there's still jitters around what's going to happen in terms of the US economy and in terms of Europe at the moment. And you have to consider that the Australian market is in the midst of a correction. This is the intraday graph behind me, but if I change the view and if we have a look at a 1-year view of the Australian market, this is what it looks like. And you can see since March we have seen this correction in play. And when we do see a correction, it is those defensives which outperform. So it's not surprising to see the likes of Telstra outperforming in this type of market. I guess the big question mark is, when are we going to see the bottom? And that's, I guess, why traders are on the sideline at the moment. There's no real clear direction. And really, in terms of technical sense, you can see this downtrend in place at the moment. You want to see a clear break of that downtrend, which is just above that 4,700 point mark, I think, for traders to get a lot more bullish about the market. As David mentioned, a lot of those growth areas are seeing multi-year lows. I mean, when you see stocks like Toll Holdings at a 52-week low, it does send a pretty weak signal about the market. In the US, a common strategy to use is to try and trade the Dow Jones Industrial Average against the Dow Jones Transport Average, and the two have to be moving up together to support a rally on the market. And when you do see, I guess, companies like Toll, which is seen as a barometer of the overall Australian economy, trading at multi-year lows, it does send a pretty cautious tone to the market and a cautious signal to traders.
To that downgrade by Moody, saying that it is committed to capital position, committed to its capital position. Moving on a little bit, Julia Leo's reading an interesting note from IG Markets. It's rating the Australian economy as the biggest headwind at the moment, in particular whether it can sustain another rate rise. Of course, one is predicted. How soon has been thrown a little bit of a question mark after today's wage numbers, but the interest rate environment, as well as what they described as a rather strict budget in terms of fiscal measures. Would you agree that it is maybe not if the biggest, but one of the big headwinds for our market?
If we do see another interest rate rise, it would be a huge headwind for our market. I mean, we have a look at the resource sector. That has been running strong, but other areas of the economy, they have been looking quite weak. Look towards the retail sector, the tourism area, even house prices have softened off. So if we do see an interest rate hike, I think it will bite quite hard in terms of the Australian economy and in terms of the Australian market as well. So we did see the wage price index for the first quarter coming out. That did come in softer than expected. It was up by 0.8%. Market was expecting to see a 1.1% rise. So that did ease some of the pressure and the thinking that we will see a rate hike sooner rather than later. And in terms of the Aussie dollar, we did see a slight pullback as soon as those numbers were released. So if we have a look at the Aussie dollar this morning, this is what it looks like. Once those numbers came released, we did see a slight downturn. But then as risk came on the equity markets, the Australian markets during the day, we saw the Australian dollar strengthening off again. The other numbers that we saw were consumer confidence numbers. We saw a fall of 1.3% in April. So once again, looking like consumers are still cautious in terms of the Australian economy.